Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 5th, 2025, and we're diving into the third quarter financial results of Sportsman's Warehouse. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sportsman's Warehouse has shown some interesting developments this quarter, and I'm excited to discuss them.
Revenue and profitability overview. Let's start with the top line. Sportsman's Warehouse reported net sales of $331.3 million for Q3 2025, marking a 2.2% increase from last year. John, what are the key drivers behind this growth?
The growth in net sales is primarily driven by strong performance in their hunting, fishing, and apparel departments. The company has been focusing on inventory in stocks and strategic marketing efforts, which have paid off. Additionally, their emphasis on personal protection products has contributed to this positive trend.
And how about profitability?
Gross profit improved to $108.7 million, with a gross margin of 32.8%, up 100 basis points from last year. This improvement is largely due to healthier inventory and better product margins, particularly in the fishing department, which has a higher margin profile.
EPS forecast and analyst expectations. Now let's talk about earnings per share. Analysts were forecasting an EPS of around 9 cents, but the actual adjusted EPS came in at 8 cents. Can you explain this discrepancy, John?
Sure. The adjusted EPS of U8 fell slightly short of the forecasted 0.9. This miss can be attributed to increased SG&A expenses, which rose to $104.5 million due to reinvestments in customer-facing areas and digital marketing. While these investments are crucial for long-term growth, they did impact the short-term earnings.
Operational efficiencies and future outlook. Sportsman's Warehouse has been focusing on operational efficiencies. How has this impacted their financials and future outlook?
The company has managed to maintain a flat net income, which is an improvement from a net loss last year. Adjusted EBITDA also increased to $18.6 million. They opened a new store in Surprise, Arizona, which is their first personal protection-focused concept. This strategic move reflects their commitment to capital management and positions them well for future growth.
What about their outlook for the rest of the year?
They've adjusted their full-year guidance, expecting net sales to be flat to slightly up, with adjusted EBITDA between $22 million and $26 million. The focus remains on inventory discipline, cost control, and generating positive free cash flow.
Balance sheet and capital allocation. Let's discuss their balance sheet. How is Sportsman's Warehouse managing its capital allocation?
They ended the quarter with net debt of $179.7 million and total liquidity of $111.9 million. The company has been proactive in reducing inventory by $14.2 million year over year and paying down $13.2 million in debt. This focus on strengthening the balance sheet is crucial in navigating the current economic environment.
Key takeaways. In summary, Sportsman's Warehouse has shown resilience with a slight increase in net sales and improved gross margins, despite missing the EPS forecast. Their strategic initiatives, including the new store opening and focus on operational efficiencies, position them well for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Sportsman's Warehouse's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Sportsman's Warehouse's performance in the comments below.